Today in Crypto. In and with Yahoo Finance, Jane Fraser CEO at Citi Group talked about the future of finances and its potential integration with the crypto industry and digital currencies. Related Reading U.S. citizens will soon be able to buy Bitcoin across 650 banks. Fraser addressed the question by talking about the potential use cases for crypto assets and their capacity to improve the legacy financial system. Citi clients have shown great interest in cryptocurrencies as confirmed by the executive, she claimed. Other banking giants in the U.S. have revealed a pressing demand from their clients to gain exposure to crypto assets. This has led major banks in the country, such as Citi, Goldman Sachs, J.P. Morgan Chase, and others to offer cryptocurrency-linked financial products to their wealthy clients. Related Reading: Bitcoin bull market to continue in 2021 as Citi predicts 20% dollar crash. Thus, Fraser confirms once again that there is an increasing demand from institutions to enter the crypto industry. The executive believes this nascent asset class to be the future of finances and real-time payments. In that sense, crypto is viewed as a tool to improve the legacy financial system and will become ubiquitous in that future, Citi CEO claimed. She added the following: however, Fraser also mentioned the uncertainty surrounding the crypto industry, especially making an emphasis on regulations. In the U.S., many actors within the space and even inside the Securities and Exchange Commission (SEC) have asked for more clarity in the legal framework for cryptocurrencies. High-ranking officials have taken the opposite road, with most adopting an indifferent or hostile stance on the industry. If regulations tighten, the U.S. is at risk of a great crypto migration to more friendly lands, but the approval and posterior launch of a Bitcoin ETF seems to have put those fears under control. Related Reading: Crypto Mom fires back, proposes way forward in crypto regulation. Still, many questions remain open. As the Citi CEO said, on the future of cryptocurrencies, their capacity to scale, their resilience, and the implementation of guardrails to protect retail customers. Fraser said, despite its concerns, the banking institution is moving forward with building its own crypto infrastructure to facilitate the adoption of this asset class to its partners and clients. Fraser added, as of press time, the total crypto market cap stands at $2.67 trillion and shows some strength in the daily chart. Electric services provider Ameren Corporation, NYSE, announced Monday that it has successfully mined upward of 20 Bitcoin, BTC, using excess energy generated by one of its coal-based power plants, the Sioux Energy Center in West Alton, Missouri. While the company set up the data center used to mine the coins back in April, it did not publicly announce the addition until Monday. Its half-megawatt mining facility taps into the Sioux Energy Center's 972 megawatts generation capacity to complete the necessary proof-of-work-based mining activities. Continue reading on Cointelegraph. Bitcoin, BTC, has recovered from the dip below $60,000, indicating strong buying at lower levels. CryptoQuant CEO Kyung said that investors used market orders to buy $840 million worth of Bitcoin futures on dips to $60,000. This suggests that analysts are positive for the rest of the year and anticipate the bull run to continue. Analyst TechDev believes that Bitcoin's price action in 2021 is following the same trajectory as in 2017. If that were to happen, Bitcoin could be getting ready for a sharp move higher in the remainder of the year. Continue reading on Cointelegraph. The Beijing-based crypto firm Sino Global Capital launched a $200 million fund backed up by crypto exchange FTX to invest in projects such as DeFi, Web 3.0, and NFT infrastructure. The news was first reported by The Block, along with the firm's CEO comments about their expectations and further approach. Sino Global explained that Liquid Value Fund I will have a hard cap of $200 million and is going to focus in Asia, especially India, according to an official statement made to CoinDesk. The focus on India was to be expected since the firm's CEO Matthew Graham recently tweeted they are looking to hire investment analyst interns physically based in India. The question was raised by other Twitter users whether this is just an attempt for a rotation away from China market. However, Graham has shown further interest in India's knowledge of engineering and its prominent crypto space. He stated to the block that at the firm they see India as an extremely important, yet idiosyncratic, market for crypto. Recent reports show that India has 100 million crypto owners, a top number higher than the U.S. 27 million, and any other country. Their crypto space is increasingly growing at a rapid speed, being of great potential. Related reading reported that the liquid value fund I will purchase some of the firm's investments at cost, including Layer 0, Orca, and Clearpool. They also stated that this is the first time the Chinese crypto venture capital firm accepts outside investment from a broad range of accredited investors. Recently, FTX raised $420 million from 69 investors, getting to value the company at $25 million. In regards to the event, Bankman-Fried commented the following to Graham believes India counts with the greatest crypto entrepreneurs and along with FTX aims to find opportunities in the country. Despite India's unclear policies, Sino Global CEO remains positive about the government allowing clarity and regulations for digital assets in the near future. Related reading: Why is India leading in crypto adoption? By Yashin Ibrahim. Investing.com. Bitcoin rose 4% Monday as dip buying prevailed following its recent pullback, and the latest data on its blockchain suggests traders should buckle in for further swings before the popular crypto makes record highs again. Bitcoin rose 4.3% to $63,041 to trade close to its all-time high of $66,967.1 seen October 20, despite cooling off somewhat following the recent pullback to $60,000. Bitcoin's funding rates, or the cost of holding long positions in the futures listed on exchanges, remains near all-time highs. History suggests that elevated funding rates are often followed by market sell-offs to ease some of the exuberance, or leverage bets on BTC. Both the September slide and the May bloodbath were preceded by heightened funding rates. Funding rates remain at similar levels as observed just prior to the early September flush-out. With futures open interest remaining near all-time highs, a risk of further downside to clear even more leverage does remain in play, Glassnode reported Monday in its weekly on-chain report. Any downside wobble, however, will likely be met with a wave of demand as on-chain data, which detail key developments in Bitcoin's network, points to slowdown in profit-taking by long-term investors. Long-term holder spending behavior appears to be slowing down as conviction returns during the recent pullback, Glassnode said. Long-term holder supply declined by around 39,500 BTC over the last 2 weeks, but have already starting to recover, indicating that the vast majority of coin holders are still expecting and waiting for higher prices, it added. In another sign of healthy demand, crypto markets continue to attract investment dollars, with a record $1.47 billion of new money flowing into digital asset investment products last week. Report Monday by CoinShares showed BTC's market cap climbed to $1,186 trillion, taking the total market cap to $2,614 trillion, just below its all-high of $2,681 trillion. Hit the like button and subscribe to the channel.